Hey guys, it's James and we're back again with another comparison video. QYLD versus VYMI. VYMI is Vanguard's International High Dividend ETF. QYLD is Global X's NASDAQ 100 Covered Call ETF. Here are the fund stats that we're going to grab from their fund website pages and from Seeking Alpha. Play around with the growth and contribution numbers to be able to determine a portfolio value all the way 10 years in the future and the incomes you can expect to receive. We'll play around the initial deposit and the monthly addition. So first up, let's go over to QYLD's fund website page. QYLD is Global X's NASDAQ 100 Covered Call ETF. You can expect high income potential from QYLD with that 13.8% dividend yield, and they have monthly distributions, and they have an efficient options execution on the NASDAQ 100 index. Some of the key information I'd like to pull from their page is the fund began December 2013. Their expense ratio is 0.6%, and their 12-month trailing yield is 13.82%. Over on Vanguard's website for VYMI, their expense ratio is 0.22%. Some of the reasons to consider, or their product summary for VYMI: it seeks to track the performance of the FTSE All-World ex-US High Dividend Yield Index. It provides a convenient way to get exposure to international stocks that are forecasted to have above average dividend yields. It employs a passively managed sampling strategy. Its fund inception date was February 2016. And just to show that the comparison between these two funds, there is absolutely zero overlapping between these two holdings. Over on QYLD's webpage for Seeking Alpha, to be able to determine their cumulative annual growth rate over the history of the fund, we take the starting value of about 25, draw a straight line to the current daily value of $20.98, and take that time period of 8 years and 3 months, and we can determine a straight line CAGR number. Same thing for VYMI. If we started at the beginning of the fund inception date of about $54 to $55 all the way to today, over the course of almost exactly 6 years, we can determine a straight line CAGR number, and it's going to be positive for VYMI. Let's go ahead and do that on our CAGR calculator section of our spreadsheet. For QYLD, the starting value was 25. For VYMI, we chose 54. It looked like it was around $54. For a time period of 8 years and 3 months, 8.25. In a time period of 6 years, these are the CAGR numbers that you would expect to get for QYLD versus VYMI. Negative 2% for QYLD, 3.82% for VYMI. And just to let you all know, my calculator is over on Patreon if you would like access to it. Before we start to jump into my calculator, let's check out the history of these two funds on Portfolio Visualizer. QYLD versus VYMI. With dividends reinvested, QYLD would outperform over the course of this time period, starting at the fund inception date of VYMI, March 2016. QYLD has an 8.91% CAGR and VYMI has a 7.58% CAGR. Without reinvesting dividends, let's see how they would perform. VYMI would outperform QYLD without reinvesting dividends. If you pulled them out, QYLD would have a negative 1.78% CAGR and a 3.75% CAGR for VYMI. So very close to the CAGR numbers that we calculated for our fund history, for our fund market prices from Seeking Alpha. Over on our portfolio value spreadsheet, comparing these two funds, 13.82% for QYLD, 4.18%. We got this number from Seeking Alpha for VYMI, 4.18% dividend yield. These are the expense ratios. This is the frequency that these dividends are paid out at. And coming down to the growth and contribution tab, just keeping our $10,000 initial investment with having dividends reinvested, QYLD would outperform VYMI over the course of the next 10 years with these current CAGR numbers. And this is the type of dividends you would expect to be reinvesting into your portfolio under these conditions. If we did not reinvest our $10,000 in either one of these funds, VYMI would outperform. Your QYLD fund would depreciate to $7,600 after 10 years, and your VYMI after 10 years would appreciate to $14,231. QYLD versus VYMI. In the income side, you would expect to annually receive these type of dividends from these two funds over the course of 10 years. Let's say we did reinvest dividends and we wanted to sink in $1,000 a month in QYLD and $1,000 a month in VYMI. This is the type of portfolio you would expect to receive from these two funds. Almost $200,000 for VYMI and $225,000 for QYLD. And these are the dividends that you would be reinvesting in these funds. If you did not reinvest your dividends, you can see VYMI would outperform with their 4% dividend yield and 3.8% CAGR over the course of 10 years. And these are the dividends you would expect to receive from these separate funds. And this is just a little calculation of trying to determine how big of a portfolio size you would need with QYLD and VYMI to be able to receive these dividends monthly. If you wanted to receive $1,000 a month in dividends, you'd need $86,000 of QYLD and $287,000 of VYMI. If you wanted to achieve $50,000 a year in dividends, you would need $361,000 in QYLD, 1.1 or 1.2 million in VYMI. Head down into the comments and let me know what you thought of this comparison. If you want to see another comparison of two different ETFs or stocks, let me know. And with that, thanks for watching.